If you use the MACD in your trading, you've probably noticed a classic problem. By the time the signal appears, the main movement has already happened. And this is even worse for those who do scalping or day trading where seconds make a difference. Today I will show you a new TradingView MACD that anticipates momentum changes, filters noise, and provides faster, cleaner signals than the traditional MACD. This indicator was created by Algo Alpha and uses an advanced concept called the normalized Gaussian filter, which completely changes how the MACD behaves on the chart. So let's get straight to the point. The first thing we need to do is be here on TradingView.com and choose an asset that we can trade. I'm on the EURUSD. You can choose Forex pairs, cryptocurrencies, stocks, indices, whatever you prefer. I'm currently on the 15-minute chart, but you are free to select any other desired time frame too. I'll navigate to the indicator section and then perform a search for normalized Gaussian. And then the normalized Gaussian MACD Heikin Ashi from Algo Alpha will show up right here. Just click on it and it will appear exactly as it does here on my chart. For its settings, we'll just leave the factory defaults as they are. No need to change anything. You can simply click OK. Why is this MACD superior to the traditional one? The main difference lies in its normalized Gaussian filter, which significantly cuts market noise, quickens signals, and enhances momentum change readings. If you compare this MACD with the traditional MACD, you will notice the difference. This one signals reversal momentum much earlier than the traditional MACD. For example, in this specific area of the chart, the traditional MACD below was still indicating that the price was in a bearish trend, which in this instance was a correction. However, with the new MACD, it's already showing the reversal beginning right from this point, exactly at the very bottom of this movement. What the normal MACD would have indicated earlier, up here the price was already almost reaching the previous peak, which is quite detrimental because you could ultimately make a delayed entry due to that. This doesn't occur with the new MACD, and a significant distinction of it is the Heikin Ashi, which consists of these bars that effectively smooth out both price action and market structure. Green signifies buying momentum and red indicates selling momentum. In fact, many times the Heikin Ashi candles change color before the histogram, offering an early confirmation. And there's also the overbought and oversold part as well. Because it's normalized, this MACD can also identify better oversold and overbought regions. Highlighted zones on the indicator with alert triangles. But it's important to remember, overbought or oversold doesn't mean an automatic reversal. These signals should be used together with context, never alone. Therefore, allow me to demonstrate precisely how I personally apply this indicator in my trading strategies to execute my operations. Before we continue, many ask what platform I use for Forex, stocks, and cryptocurrencies. I personally use EXNESS because it offers very fast execution, extremely low and competitive fees, and a simple to use dashboard. It's the platform that best fits my analysis style and workflow. If you want to check it out, I've left the link in the description as well. For a downtrend operation, what will I utilize? I'm going to implement an exponential moving average. So let's come over here to indicators again and type in EMA. Just click on moving average, it will appear on your chart, then in the corner go to the settings, set it to 300 like mine, and you can change it to white to make it easier to see. We have the moving average now. If the price consistently trades below this moving average, it indicates a clear downtrend. If it starts trading above it, creating higher highs and higher lows like what you see right here, then we clearly have an uptrend, alright? So man, check out how I like to use them both together. For example, right here, we clearly had a significant downtrend unfolding. The price then moves back up to a somewhat higher point, quite near the average, or even reaching it just like we observed here. And we also observe that our new MACD indicator is beginning to show signs of being overbought. There was significant buying pressure here. At some juncture, this price will inevitably need to reverse its course and revert to the prevailing downtrend, assuming it intends to sustain that particular market trajectory. So look, it just performed that exact move right here, demonstrated by this triangle, which occurred more or less on this specific candle, right? Actually, it was on this green candle, see, right here, exactly on this green candle. So what exactly do we need to await? We must observe for a red candle to manifest on the chart, signaling that the price will possess sufficient momentum to revert to the downtrend. A strong candle, a rejection candle. And here, in this exact context, I have precisely a strong candle. Look at this. It engulfed the previous candle and closed very red, significantly below this candle right here, which is precisely where I could have placed my entry. So how would that look? I would place my entry at the closing of this candle, my stop loss just a bit above the low of this candle at 0.09, and my target I'd set 2 times lower at 0.18, and the price came and hit it right here across the next few candles, giving a take profit on this sell. Now for an uptrend, it's the exact same concept, just the opposite. Look closely. The price is trading above the moving average, and at this precise moment, following a correction, it has reached the oversold zone of the indicator. This means there's been extensive selling, and at any moment it could reverse course and begin to climb upwards. Therefore, we will be waiting for the triangle to make its appearance. When a green triangle appeared, we proceeded to execute a buy order. It was precisely on this particular candle here. So, at the closing of this very candle, I can confidently place my buy order. My stop loss will be placed a little below that last low, which also marked the candle's lowest point, approximately at 0.06, and I then position my target twice that distance higher, at 0.12, and the price came down to perfectly hit that level right here, precisely on this wick. Hitting the target again, this time on an uptrend. This new MACD, like any traditional MACD, offers clear advantages, faster signals, less noise, a better visual read of momentum, and support for continuation and reversal strategies. Thus, if you seek precision, especially short-term, this indicator surpasses the classic MACD. And if you like videos like this, subscribe to the channel here, turn on notifications because I'll always be bringing new videos. And if you're a subscriber, you'll be among the first to know. Also, leave a comment here saying more indicators if you wish for me to bring more such indicators, completely revamped, offering clear advantages over the older versions. Thanks, goodbye for now, and I'll see you in the next lesson.